Good afternoon, everyone. Welcome to our webinar. We'll just give it a few minutes for everyone to come in and then we'll get started. I think we've got quite a few people joining us today, which is very exciting, and we've got a pretty cool topic we're talking about today. So we will make sure everyone gets the full webinar.
Yeah, I think this is our most popular yet, right, Rach?
Absolutely, yeah. I mean, it's definitely something I'm interested in. So we're keen to go through it with everyone. And I'll kick off with some housekeeping in just a minute. All right. As people are joining us, I'll just go through how this webinar is going to work for those of you that might not have joined our webinar before, or just as a refresher. So we've got the chat function, which you'll see at the bottom of your screen. Feel free to use the chat throughout for making any general comments. We're going through a lot of really interesting stats and information today, so feel free to add in your thoughts and comments as we go. If you do have any specific questions, Jack and I will be going through the questions as we go. Sorry, I didn't introduce Jack or myself. My name's Rachel and this is Jack.
Good day.
And yeah, we'll be taking you through today. So if you do have any questions, pop them in the Q&A function. You should see a specific Q&A button at the bottom of your screen. Feel free to jump in there and we'll be watching that throughout. As we talk about each expert investor, we'll be answering your questions about them as we go. I will share my screen with you now. And we'll get up our slides for today. Oh, not that one, our slides. There we go. So we will be taking a look today at some of the most well-known investors in the world. And so you can see there, we've got Warren Buffett, we've got Cathie Wood, and we've got Masayoshi's son. So I'll just cover off a quick disclaimer that Superhero does not provide financial advice. It considers your personal objectives, financial situation, or particular needs, and that all investments do carry risk. So please consider carefully before investing. We will be going through some graphics, some examples of what these investors invest in, but just keep in mind that this is not financial advice for you, and that these are for illustrative purposes only. And you should always consider consulting a financial advisor. Okay, so we spoke about this briefly, Jack, but these three investors are seen as some of the most successful or the most interesting investors in the world. But interestingly, they all have very different strategies.
That's right. Yeah, I mean, when we look at some of those faces up on the screen now, you can see Warren Buffett is probably the most famous investor of all time. Next to him, you've got Cathie Wood, who has really sort of exploded in sort of fame the last few years, and then you've obviously got Masayoshi's son as well there on the right. But three, incredibly different styles of investing, I would say, all very famous in their own right, but a completely different approach to the market. They're all looking for different things. They're all investing in different ways. And as we go through, I think it's sort of pretty significant to see that, three of these huge investors, while very successful in their own right, in different respects, they just, their approach to investing is completely different. And it just shows, I suppose, that there's, not one correct way to invest. There's no foolproof way to invest. We'll see, all three have made mistakes during their careers. But yeah, it just sort of, it's going to be a fascinating sort of insight into, who they are, what they look for, and, maybe we'll get some ideas of different ways that we can sort of look at the market.
Absolutely. And I mean, where else could we start?
Exactly.
Then Warren Buffett.
Warren Buffett, the Oracle of Omaha. He's the, he's referred to as the father of value investing. He's one of the richest people in the world. He's worth, I think, around 120 US billion at this point, which is an eye-watering sum. He's clearly done very well for himself.
Yeah.
He's 91 years old. He made his first investment at the age of 11. And
I was not thinking about anything close to investing when I was 11. I think my worst, all I could think about was how to get through my music practice in less time,
Well, he famously said that before he made his first investment at 11, he was wasting his life. So you can kind of see
it's a lot of pressure. A lot of pressure for an 11-year-old.
Yeah, well, I mean, and not many investors can probably boast that they've been, in the market for 80 years. It's pretty extraordinary. He's had a pretty extraordinary run. When we look at his style, he tends to favor holding stocks for a very long time. Another one of his quotes is, if you wouldn't hold a company for 10 years, you shouldn't hold it for 10 minutes. And when we look at sort of, some of the big names that make up his portfolio, you've got kind of really iconic brands, things like Coca-Cola, American Express, Heinz, Bank of America, these sort of really, dinky die kind of Americana sort of, brands that we're all familiar with, and we're all familiar with a reason, right? They've been around for a very long time. They've got a really established, track record. And that's kind of what he's looking for when he's investing, and when Berkshire Hathaway is investing as well.
I think a couple of things we're talking about as we were preparing for this webinar, Jack. You can see on the screen there some of the logos of the companies that Warren Buffett invests in. And you will notice a lot of red and blue, which interestingly also happens to be the colors of the American flag. So, it's interesting that these companies, when you look at the world today, I guess if all of the bells and whistles went away tomorrow, these are companies that are such a part of our everyday lives now that they would just continue to be part of the world's economy, really. Coca-Cola, how many stores just in one shopping strip would have Coca-Cola, and Bank of America there being really a core of the American financial system, which has a very large population as well.
Absolutely. So, I mean, they're kind of, in many respects, some of these are, what you might term like all-weather stocks, right? They're things that even, should a recession hit, or should there be a financial downturn, like I suppose people are still going to drink Coca-Cola, still use Heinz products, that kind of thing. But he's also, as a value investor, he's looking for companies that make sense to him. So, he's got another saying, he's full of sayings, that, it's better to buy a wonderful company at a fair price than a fair company at a wonderful price.
Absolutely.
So he's looking for, really strong fundamentals, but he's also looking to pay, fair value.
Yeah.
And that's sort of how he approaches the market.
Yeah, absolutely. I can see a few things in the chat. I would have loved to have gotten Warren Buffett on the webinar today, but unfortunately he's a very busy man, and Superhero isn't quite at that status yet where we can get the great Warren Buffett on a webinar.
Maybe next year.
Yeah, maybe next year we'll try. And interesting question from Bryce there. Where is Ohama? Very interesting question. Ohama is actually in Nebraska.
We may have misspelled it on the slide there, but don't let that take away from it.
But interestingly, Warren Buffett still lives in the same house. I don't know how long he's had it for, but I think for decades now, he's lived in the same house. So, Warren Buffett is a very interesting person. Not only is his investing strategy very long-term, but also his choice of residence.
Absolutely. Yeah. He's not known for splashing cash around the place.
No. All right. Now we thought we'd take a look at Berkshire Hathaway's, performance over the past few years. Now, there are a couple of different listings of Berkshire Hathaway on the stock market. Some are a lot more expensive than this to buy in, and different classes of shares. So have a look into that if you are interested. But we thought we'd have a look at these Class B shares of Berkshire Hathaway and how they've performed over time. So we've looked at the past 1 year, and you'll see this as we go through. And the past 5 years as well, to really take that more long-term view as we go through. And I guess what we can see here, Jack, is that Warren is very consistent in what he does. You can see in that 5-year chart, when it came to 2020, he definitely saw a bit of a crash in his stocks as well. But he's really seen that consistent growth come back as the market's rebounded. And even in the past 1 year, look, not all stocks have done so well recently, particularly in some industries, but Warren Buffett, having this really diversified view and look for value, value stocks that have really good business fundamentals. It seems to be really working for him.
Yeah, well, I think that's kind of one of the takeaways when you look at that long-term investing strategy. So, since the pandemic struck, tech, for example, to call out a sector, has done particularly well. But, since sort of mid to late last year, has sort of sold off. If you were 100% in tech, you would have made a lot of money in the last sort of, 2 years. But in the last six months, those returns would have dried up. So when you look at a Buffett, you look at a diversified portfolio, you look at that kind of long-term holding, whatever the market is doing generally, he's going to have winners, he's going to have some losers. But I found an interesting fact on him, which was that over the last 55 years, very long time frame, he's returned, or Berkshire has returned about 20% a year. That's about double the S&P 500, so about double the market. And while probably in the last 10 to 15 years, his returns have probably been a bit closer to the market, sometimes a little below, sometimes a little above. It just shows, the kind of extraordinary run that he's had. Although I should add, historical performance is, no indicator of future performance. So just something to keep in mind, but a pretty extraordinary run he's had over the last 6 decades.
Yeah, absolutely. Jeanette has a question there just around, is there an ETF you can buy that would reflect Buffett's investment strategy? I'm not sure on Buffett exactly, but what I do know is there are a range of ETFs available that do target the value investing strategy. So again, do your research on what those are, but I know there's an index that kind of targets this value investing space, and there are definitely some ETFs that look at value companies, which I guess is really looking for those strong business fundamentals.
Absolutely. And then obviously Berkshire Hathaway is a publicly traded company as well. And as Rach was saying, there are different classes of shares. Class A shares are worth an extraordinary amount of money on the market at the moment. I think, in excess of $200 US a share. There are Class B, there are other classes. That's another way to, I suppose, get exposure to the Buffett style of investing if you wanted to explore that path. But just something worth looking at. Yeah,
and just a good note about US shares as well. So we've got Berkshire Hathaway up here. We do offer fractional investing on US shares, which means that you don't actually have to have a full, we've got $322 up on the screen. You don't have to invest that much in order to invest in this company. You can invest from $10 US a share. So you can invest fractionally there. You don't have to buy a whole share for some different classes of shares. It just depends. So you'll have to have a look at that.
That's right.
Cool. And we will be replaying this webinar. We'll have it up on our YouTube for any of those that do have to drop off throughout. All right, now down to the juicy stuff. What is Warren actually invested in the most?
Yeah, well, as you can see on that slide there, Apple now makes up by far his largest holding. And that has, I suppose, as much to do with Buffett's, bullishness on Apple as it does on Apple's outperformance in recent years. So he began building a stake in Apple in 2016. Back then, Apple shares were worth about $25 US a share. Today, they're closer to 150. The company has had one of the sort of most extraordinary kind of runs on the market and in tech in the last 5 years. Buffett has enjoyed those spoils. To put it kind of in perspective, he's made about $120 billion profit on that. So you can see there, he's got about $160 billion stake. He paid in the realm of about $36 billion from memory. So just an extraordinary profit. And that's why Apple now makes up such an enormous amount of his portfolio.
Yeah. I mean, Apple as a company is worth more than the entire ASX, just to give you a comparison there. So
it's extraordinary.
It's amazing. And I think Buffett is around the second largest holder of Apple. The biggest there is Vanguard, that holds more Apple than Buffett does, or Berkshire Hathaway does, but he's really up there in terms of the biggest holders of Apple.
That's right. And then if we sort of work our way down the list, I mean, again, just some really iconic names: Bank of America, American Express, Coca-Cola, Heinz, Moody's, which is a ratings agency, rates investments, that kind of thing. Verizon. So, and again, you've got a lot of different sectors here, right? So you've got energy, you've got telcos, you've got financials, consumer. You've got sort of a whole range of different sectors that he's interested in, that he holds stocks in, and just an enormous portfolio as well. I should add as well, though, that he also has Berkshire Hathaway holds an extraordinary amount of cash as well. So Buffett is a value investor. He's looking for companies and stocks that trade, at either around what he thinks they should be valued at, or even below that. So he kind of picks up a bargain, a good deal, I suppose. If he can't find stocks that fit his kind of thesis, he's also happy to hold cash, right? He's not breaking his investment strategy to buy things that he doesn't believe in. So he has over $100 billion in cash sitting on the sidelines, waiting to find that next opportunity.
Yeah, it's really interesting there. Question: does Berkshire Hathaway invest in any Australian listed companies? I'm not sure. I wouldn't assume so, but I'm sure it's somewhere on Google. I'd be very interested in knowing if he does invest in any Australian companies.
Yeah, I'm not across their entire portfolio. No. I would be surprised if he was, but also, I mean, he does control an enormous portfolio. He could hold a very, very small percentage, but we'll have to check that one for you.
Yeah. And then just a question on fractional investing. Is it the same as micro investing? Again, it depends what you determine as micro investing. Really, all fractional investing is it just allows you, essentially, a lot of the US companies have quite high prices for one share, particularly when you compare it to some of the Australian companies. They're often lower prices for one share. So what fractional investing allows you to do is actually buy into a certain investment, whether that's Apple or whether that's Tesla or Berkshire Hathaway, for a smaller amount of money than one whole share.
You're buying a percentage of a share, whereas I guess micro investing typically is you're investing much smaller amounts into a portfolio, or into your investment portfolio at a time. So you might be buying smaller amounts.
Yeah.
Fractional investing, you're actually buying, a percentage of a single share.
Yeah. And not all shares have that availability, but there are a lot that do. So definitely check that out.
Right. So his recent investments. So he's had a few recently that, I think are worth sort of calling out. Two of the big ones, we can see Chevron there, as well as Occidental Petroleum. Basically, I mean, if you filled up your car in the last few weeks, you would have noticed when you got to the Bowser just how high petrol prices have gone. Obviously, the price of oil has just completely soared over the last few months. It's almost doubled since November. And you can kind of see Buffett with these more recent investments trying to get some exposure to that. So even in recent weeks, we've seen sort of a bit of a broad market sell-off. And at the energy sector, and a few energy companies have kind of defied that. As of, others that are related to commodities prices are kind of booming at the moment. So you can see there, he's sort of taken quite large stakes. I mean, for him, it's probably, couch change, but he's put about $6 billion US into Occidental Petroleum over the last few weeks. He has kind of been invested on and off with them since about 2019. Chevron as well, he began investing in 2020. But the other interesting one to note there is Activision, so a big game developer, a big game studio.
Yeah.
He actually bought a $1 billion stake in them just before Microsoft acquired them. And Microsoft acquired them for something in the realm of about 60 US billion. It was the biggest, one of their biggest acquisitions ever. They actually paid a 23% premium on what Buffett had bought his stake for. So Berkshire Hathaway investors have done very well for themselves with that one.
Buffett getting into gaming sounds a little bit more high tech than what he's normally into. Alrighty, talking of high tech, the next person we thought we'd talk about is Cathie Wood. So Cathie Wood is the founder of ARK Invest. And what Cathie really did was she wanted to create investments that were more active than a normal ETF. So instead of just tracking a general index, she was essentially picking some themes and some focus industries that she thought were really going to change the world in the coming years. And so as we go through, you'll really see that her investing strategy is futuristic would be a word that I would use. And she's really picked key industries that she thinks will change the way that we live forever, and that are really, based on these new disruptive technologies.
She calls her investing strategy disruptive innovation. That's kind of what she's looking for.
Very much buzzword, type of investing.
Yeah.
She has 6 active ETFs and 3 index ETFs, which we'll go through a little bit more today. And they really focus on the areas of tech in a number of different ways, and also the healthcare sector and the biotech sector. Interestingly, Tesla is her biggest holding, and that makes up 9.77% of her ARK Innovation ETF, which is the largest ETF of the ARK ETFs. And
like with Buffett, you can see that, when you've got sort of, I guess, a standout performer that can kind of absorb a big part of your portfolio. So Tesla, like Apple, has had sort of an amazing run over the last couple of years, and that has really helped lift her fund's performance.
Absolutely. An interesting note there, I found this quote and thought it was just interesting to compare the Buffett response and then compare that to the Cathie Wood response around oil prices. As Jack said, Warren got straight into oil, and as oil prices have risen, he's really benefited from that. Cathie Wood, they're taking a slightly different look at the impact of oil price rising. And instead of, I guess, investing in oil, what she said is essentially that she thinks this will create demand for, or more demand than there already is for, electric vehicles, and potentially speed up that process of people going into electric vehicles as they see the price of oil and petrol rise. Really seeing there the differences in their approach.
Yeah, and so interesting to see, two very different investors see the same kind of situation playing out, and I guess invest in 2 very different ways to kind of, try and capture the returns from that.
So just a quick overview of the ARK ETFs. You can see there, so the ARK Innovation ETF at the top, that is almost the summary ETF, I like to think, of all of the others. So the next 5 ETFs there are more specific in terms of what they target and the industry that they target. And then the ARK Innovation ETF at the top is more of an overview of her entire investing strategy, if you like, in this disruptive innovation space. So going into, and you can see there that the net assets, so the assets that are actually invested into the fund, the ARK Innovation ETF by far is her biggest ETF that people invest in, and definitely the most well-known.
Completely. And I think it's probably worth calling out as well. When we talk about ETFs, it's such a broad church. And when we look at Cathie's and when we look at ARK, we're talking about active ETFs. So, that have quite actively managed.
Yeah.
Her and her team are actively, picking winners.
Yeah.
They're changing the portfolio as different things emerge. So you can see as well there, when you look at the expense ratio, that's a little bit higher than you would see on something like a passive ETF or an index fund where you're just sort of invested in the ASX 200, for example.
Yeah, the active versus passive, that's something I didn't know when I first started investing. I think someone there just mentioned a mere NDQ, which is the Beta Shares NASDAQ 100 ETF. Now, that's a really good comparison to something like the ARK ETF. The NDQ ETF targets the top 100 companies essentially that are listed on the NASDAQ by market cap. So I guess the difference there is no one's really sitting there every day trying to pick those shares. Those shares often stay the same, but they are just the biggest 100 companies. So no one's really trying to figure out who's going to be successful, who's not, picking individual stocks there. It's more of a market tracker or an industry tracker as a whole, whereas Cathie Wood's ETFs very much are actively managed. And the ARK website is actually a great resource. You can go on there, you can see the team of investment managers that she has. You can go into detail on all of the holdings of each of the ETFs, the performance. It's also a pretty cool looking website. So I definitely recommend jumping on and having a bit more of a look. And now onto performance. I see red, Jack. I see red.
Never a good sign when you're checking your portfolio.
No. Now, we looked at 6 months for Cathie Wood just to show, I guess, really what's happened to her portfolio recently. You can see it there on the 5-year chart as well. But give us a little bit more insight into what's happened in the last 6 months.
Yeah, so I mean, this again is sort of a classic example of what we were speaking about before, right? Where a certain sector or a certain part of the market has performed, well above average. For example, with tech, I mean, we saw going into the COVID crash, coming out of that, a lot of these sort of innovative companies did really, really well. Companies, big tech companies, Apple, Microsoft. You had companies like Peloton, people were exercising at home. You had Zoom, people were working from home. And they just exploded. And they did really, really well over a period of 18 months. And then in the last sort of 6 months, there's been a real slowdown. There's been, a recent kind of sell-off. Some of these valuations have been on the slide. You've seen it with EV companies. You've seen it with these kind of very hyped companies that, long-term may have a brilliant future, but that the market at the moment is looking at their valuation and perhaps saying, we think it's a little high. So you can see, I mean, for someone like Cathie Wood, she kind of epitomizes that sort of innovative tech investor. So you can see the last 6 months, her fund down about 52%, which is obviously a lot, it's halved. But if you zoom out, you start to get a very different picture. So again, I mean, she's investing for the long term, just like Warren Buffett, but in these very kind of, she's a very thematic investor. She's sort of looking at sectors like AI, EVs, energy solutions, this kind of thing. And so what basically she's been going out and telling investors is, well, yes, the funds are doing quite poorly at the moment, but this is sort of a aberration, or this is sort of an outlier. And long term, these technologies will be used. There's a lot of potential for them. The market's growing, and she kind of promises that her valuations will come back. Whether or not that happens, we couldn't say, but it is just interesting looking, at how different investments perform at different points.
And I mean, that's what she's trying to do. She's being disruptive, and disruptive can sometimes mean volatile, and it can mean that people have differing opinions on certain industries, but she really does, stick to her guns. And you'll see that in the media and how she speaks and she quotes. You can see there when it looks, 2020, you can see that slight dip there, which was probably slightly less of a dip than potentially Warren Buffett's, but hard to see on that graph. But I mean, look at that spike throughout 2021. That is steep. And compared to even, the previous three years, just crazy highs there. And then, if you take 2020 to then 2022, you're still actually up if you had have invested in 2020. So yes, you know, if you'd got in the top, you wouldn't be looking so good right now. But yeah, it is important. And again, that's why everyone does say investing over the long term, you know, is what all of these investors really try to target.
And it's what your returns, I guess, work out to be over, you know, a period of 10 years, you know, 20 years. You'll have all investors will have, you know, could have really amazing years where they beat the market by a large margin. They may have years where they lose money. You know, how are these portfolios, I guess, performing over the long term? And if you're a long-term investor, that's really what matters.
Yeah, absolutely. And I think, again, like you mentioned, Jack, it's really all about your goals as an investor. Exactly. You know, there might be some ETFs or investments that, you know, are a little bit safer, and then there are others that are riskier. And you've got to take that into account when you're thinking about the investments that you choose in your own time horizon as well.
That's right. And there's just a comment there on the Q&A. Is ARK listed on the ASX? It's not. It's listed on the New York Stock Exchange.
Yeah.
On Wall Street, which means with Superhero you can buy it. It's just a US listed ETF.
Yeah, so you can't buy it in your Superhero Super account, but if you have a trading account with us, absolutely you can invest in all of the ARK ETFs. You can transfer into USD from your wallet, and then you can trade US shares. Yes, it is on Superhero in our trading account. Cool. And then a quick look into the holdings of, we've gone for the ARK Innovation ETF. A lot of these you'll see across different ARK ETFs in different concentrations. So go in again to the ARK website and have a look. But the biggest ARK ETF, the Innovation ETF, as you can see there, Tesla is the big gun there. Roku, I think it's pronounced. Interesting one there. Not super present in Australia, but in the US, I was doing my research, and it's, the best way I can describe it is kind of somewhere between a Chromecast and an Apple TV with a bit of Foxtel thrown in, Jack. I don't know whether you can do better, but it really is, you know, TV streaming, smart devices, kind of going into this next generation of entertainment for people, and quite big, I think, in the US and in Europe as well. Teladoc Health, and as I go through this, it's really interesting, very heavily in tech, as you say, but really touching very different industries.
Definitely.
When you think about, you know, she's got automotive here, she's got healthcare, she's got media, she's got communications, she's got finance. So yes, it's all in tech, but what she's really betting on is that tech is going to change every industry.
Absolutely.
And so I think when everyone thinks about tech, it's important to understand that tech in itself isn't just one industry, but it really is touching a multitude of industries there. So Teladoc Health, there is, you know, virtual healthcare, which during the pandemic was definitely a popular one. Zoom, most of us would know Zoom. You're on Zoom right now, so you definitely do. And then you can see there the likes of Coinbase in the blockchain space, Spotify, which many of us know. Look, Twilio is a messaging kind of B2B software. So yeah, really, you know, a bunch of different companies there.
And again, you know, companies that did extraordinarily well between, you know, early 2020 and at least sort of mid 2021 for a lot of them, but that, you know, may have gotten ahead of themselves. There's a little bit of a correction, I suppose, in some of the valuations with crypto and various other things. But yeah, fascinating to kind of see all the different, different types of innovation, no matter whether it's EVs or finance.
All right.
Masayoshi-san.
Yeah, Masayoshi. I'm gonna struggle to say that a lot of times, so bear with us, guys. But this one is a little bit of a different one, probably a little bit less well known than the other two. And I think there's a couple of reasons for that, mainly because he often invests in private companies. So it's a private kind of investment company or strategy, but we thought it was important to have a look at this space a little bit different to the big public Warren Buffett style or, ETF style of Cathie Wood, and just take a look at a slightly different strategy. As well.
I think it's interesting to look at Masayoshi because in a lot of ways, there are some similarities with Cathie Wood. You've got someone who is incredibly bullish on tech, who is investing, I suppose, is sort of towards the more high risk, speculative sort of end of the investment spectrum. Certainly not what people would call a value investor like Warren Buffett, but invest at kind of a different life stage of this company. So whereas Cathie Wood is very much invested in public companies, SoftBank is very much invested in private companies. So often companies that will go public at some point, that will list on an ASX or a New York Stock Exchange or NASDAQ, but trying to get in early. And that's where they kind of see where they can get the most value, right? So before this company kind of explodes on the stock exchange, getting a stake in it, which is obviously carries higher risk, but also potentially higher rewards. So you can sort of see some of the investors in their funds. So people sort of bankrolling. SoftBank include, Apple, Qualcomm, which is a big chip maker, Foxconn, Larry Ellison is one of the co-founders of Google, Alphabet, and Saudi Arabia's sovereign fund. So sort of growing the wealth of Saudi Arabia.
Getting money from all over the place. So that's essentially, people giving SoftBank or Sun's Vision Fund. He's got this fund called the Vision Fund, giving him money, and then he goes and invests that in private companies, a lot of which then do go on to go public. So we'll go through a little bit of that strategy now for you. On the right, you can see some of the companies that are in the Vision Fund. Some you might know, ByteDance being the parent company of TikTok. Cameo there is kind of personalized messaging from celebrities. I was having a look on their website and it's a very broad range of people. You can get a message from Hagrid. You could get a message from an AFL player. It's really reality stars. It's really endless. Whatever you're into, there's a Cameo for you. And then we've got Flipkart there, which is an Indian e-commerce marketplace, and Klarna, which is a buy now, pay later, founded in Sweden, with a big presence in Europe, also in Australia now as well. Katrina, I can see there you've said, can we invest in private companies through Superhero? We're about to go into that a little bit more in detail.
So as you can see, SoftBank invests in different companies at different stages, typically pre-IPO. Many of them often will list eventually. So you've got companies there, just on that slide there, I can see Grab, which is sort of an Uber kind of competitor, operating out of Singapore and other parts of Asia. WeWork, which is a co-working kind of space. And again, I think it's worth pointing out a couple of things with his investing strategy. He's been called, SoftBank has been called one of the most aggressive and influential tech firms, because it is sort of, taking riskier bets. But also, some of those bets obviously aren't going to pan out. So when you look at WeWork, that's probably one of his most famous mistakes. It was valued pre-IPO at one point at $47 billion. It has since listed. It's worth about $3.5 billion. So you can see that at various points, some of these companies may be overvalued. They may lose money. I think that's worth pointing out. Even the best get it wrong. Even the most famous investors make mistakes. And another interesting sort of fact about Masayoshi is that heavily invested in the internet. So like a Cathie Wood, you can see really bullish on some thematics, right? So thought the internet was going to change everything, was correct. The internet did change, a whole range of sectors. It changed life as we know it. But he acquired massive stakes. At one point, they actually said that he owned about 25% of the internet in about 2000. We obviously had the dot-com bubble and the subsequent crash. It almost wiped him out, except he had made a $20 million bet on Alibaba, an investment in Alibaba, which, as we know today, is one of, the largest companies, certainly one of the largest tech companies to come out of China. And that has, more than saved him. So Masayoshi today is worth over $15 billion. So it just shows as well that sometimes our investment thesis can be correct. The internet did change everything, but we can also, still get it wrong or still make mistakes. But obviously, with a higher risk sort of strategy, venture capital, private equity, he made a lot of bets, which is quite typical, and one of them happened to pay off, and he's done very well out of it. And he's continued to invest and try and still to this day is trying to find the next Silicon Valley unicorn.
Yeah, I mean, unfortunately, no one can predict the future, can they?
No.
No one saw things like the market crash of 2020 coming. And so, yeah, look, I think what is common about all of these investors is that they have really a fundamental belief and they do stick to it. And even though they don't get it right all of the time, they back themselves and they continue to stick to that strategy. Thanks, Brendan, for your note as well about Larry Ellison, founded Oracle, not Google.
That's my mistakes. Sorry, Brendan.
Now, what this slide is quickly showing here is that Masayoshi will often invest in companies, like we said, before they go public. Then, once they go public, he might exit some of them, and by exiting, we mean kind of selling some shares in those companies, which then frees up his money to invest again in other investments. But he also keeps, a stake in some of these public companies. So you can see there, his portfolio is made up of both private companies and then also public companies he's still in. And then, some companies he's exited or sold off to then invest in other companies as well.
It's a question there just asking how to invest in IPOs, which is when a private company goes public. So depending on where they're listing, if they're listing in Australia, for example, you'll be able to, the ASX will give notice that they're going to list, and then on that day, at 10 a.m. when the market opens or whenever it is, their shares will be listed and you'll be able to buy them. Superhero, tries to make sure that, you can invest as soon as they are public. So yeah, something worth, if there is a company that you're interested in that is going public, it's worth sort of keeping an eye on that as well.
Yeah, sometimes the company will actually offer for you to get into the investment round before it's public, depending on the company, but often they'll have information on that on their website. But yeah, the ASX website is a great place. They'll list all of the upcoming IPOs. You can just type that into Google. Christian question around SVF1 and SVF2. Sorry, yeah, to clarify that's his two different funds.
SoftBank Vision Fund 1, SoftBank Vision Fund 2. So they have different investment theses. We won't go through them here, but you can find all their information on their website. Yeah.
And Katrina, to repeat the IPO website, it's the ASX website and it's upcoming IPOs. So if you just type that into Google, upcoming ASX IPOs on the ASX website, it'll give you that website link.
And you'll also be able to find, obviously, if you're looking at US companies, you'll be looking at the New York Stock Exchange or the NASDAQ, for example.
Yeah. Sabine question, can you invest in SoftBank on Superhero?
They're listed in Tokyo, so no, you unfortunately can't. Although I believe there is they do have, I believe, a product on the New York Stock Exchange. You'll have to look into that yourself, though. I don't have all the information, but I believe the ticker is SFTBY. If you are looking around for that.
Yeah, and I guess more of the question there is around investing in whether it's the Vision Fund, or the other question we saw before was, how can I invest in private companies on Superhero? And I guess that the fundamental answer is you can't invest in private companies on Superhero, but wait, because there's a way around this, and this is what we're going to go through now.
So yeah, you can't invest directly in private companies. They're private. They're not on a stock exchange like the ASX. There are other ways to get some exposure to private companies. We're just going to kind of run through the general sort of list. There are sort of, I guess, three kind of different ways you can. One is through listed funds. So for example, on the ASX, Pengana Private Equity Trust is a listed fund. For example, it invests in private companies. So names like SpaceX, Elon Musk's space company, ByteDance, we know is the parent company of TikTok, Bolt, which is like a rideshare electric scooter company. There's a whole list there. Basically, that fund trades on the ASX directly, so you can actually, buy shares in that fund itself. That's a bit of an outlier, though. I think, as far as I know, there aren't too many of these on the ASX. Another way you can sort of get exposure is through private equity ETFs, right? So, we're all familiar with ETFs holding kind of a basket of different assets or investments. There are sort of a number of private equity ETFs, particularly on Wall Street, not so much on the ASX, but these hold sort of a whole basket of private equity managers. Yeah. These typically will carry higher management fees. So like we were saying before with Cathie Wood's ARK funds, they're sort of they do cost more to sort of hold and own than like passive ETFs, but that's one option. Another is you can obviously invest in investment managers who are publicly listed. So for example, your Magellan's, Apollo, Blackstone, there are many, both listed in Australia and in the US. I should point out though that, private equity can be risky, and they can often carry long-term investment horizons. So just something to be conscious of if you are looking to invest in private companies and private equity.
Yeah, absolutely. Amir, your question on how to buy TikTok. Just a point on that. If there is a company that might be a private company that you really love and you want to invest in, I would always just do a Google search and say, how can I get access to X company on the stock market? And there's probably, depending on the company, there may be an ETF or a listed fund that holds that. But again, it's always important to look into the fund itself, looking at things like the management fees, also looking at how much of that company they actually hold. So the percentage of that fund that particular company makes up, what their other investments are, because obviously you're not just holding that one stock when you're investing in a fund. So yeah, just do your research, have a look around, do some Googling. But yeah, that there is a way to obviously invest in a lot of, or get exposure to the private equity space on the stock market.
And there's a question there from Sean about Magellan. And while I wouldn't give an opinion about Magellan as an investment, it does raise an interesting point, which is Magellan's share price has gone down quite significantly in recent time, and that probably has less to do with its underlying portfolio, the companies it's invested in, as much as Magellan the business. So that's, I think, an important distinction to make as well. So if you are investing in publicly listed investment managers, fund managers, it is something to be conscious of, that their share price may be affected by a range of factors outside of just, the private companies that they are invested in.
Yeah. All right, I think we've gone through most of these, but just a few key takeaways, I guess, that we've gone through today. The first one is that even the world's best investors all differ in their focus in investing strategies. I think this is comforting to me to know that there is no one way to success when it comes to investing, and everyone has different goals. We all start off with different amounts of money, and we've all got different time horizons. So it's important just to understand your own goals, where you're at. Don't get too, I'd say, distracted or weighed down by what everyone else is doing. And, it's difficult in the age of social media to stay on track when it seems like every second person's making heaps of money or losing heaps of money. And, it can get distracting, but I think understanding your own goals is really, really important as a way to start.
And your own risk appetite,
Absolutely.
I think, as well. So, I mean, it's often said, the higher the risk, the higher the potential rewards, and, and vice versa, right? So the higher the rewards, the higher returns an investor may be generating, but most likely they're also taking on greater risks. So it's about finding what you're comfortable with, the level of risk that you're comfortable in taking, and investing, to a level that you can sleep at night, basically.
Absolutely. And the last thing, that large macro movements in the environment, of which we've seen a lot recently, they will affect all investors. And we saw that in the graphs there today. So what's important is remembering your strategy and sticking with it. And that there will be up times, there will be down times, but just sticking with it for the long term.
And I think, really sticking to first of all, having a investment strategy and sticking to that. You sort of see, a value investor like Warren Buffett. He believes in, certain companies. He believes in a certain way of investing. He's not going to go and buy incredibly speculative stocks just because they happen to be going up this week. And that is, sort of treated him very, very well over the last 8 decades.
Absolutely. All right. I think we are nearly there. I think that does us for today. If there were any final questions, we can take those now. Otherwise, we'll let you get back to your day. We're so glad that you could all join us. We apologize that we couldn't get Warren Buffett on the Zoom, but potentially next time. Thank you so much for joining us. We hope this was informative and useful, and we'll have this recording up on YouTube for you shortly.
Thanks so much.
Thanks, everyone.